me now is Ted Thatcher, founder and president of Bright Lake Wealth Management. Welcome to the New York Stock Exchange.
Ashley, it's great to be with you.
All right, so S&P 500 closing at a record on Friday. What do you think is going to happen in this session with the S&P and the other indexes?
You know, I think there might be a little bit of chop this morning, but the market has just been ripping, Ashley. You know, it's incredible what we've seen. You know, there's so much narrative coming out of last year about this concentration of returns coming from the Magnificent Seven, the mega cap companies. And I think we're actually starting to see that again, but maybe with a little bit of a different flavor now. Instead of just the mega cap companies, we're starting to see so much driven by the constraints in the AI economy. You know, so much has been made of the semiconductors, the chips, the memory stack as these data centers get built out, you know, from everything from how those chips get connected to the energy itself. It's driving just this, you know, meteoric rise we've seen.
What else do you think has investors so bullish?
You know, at the end of the day, you know, Wall Street has been demanding ROI on this, what was $600 billion worth of CapEx spend. We saw, you know, even in the last 7 days, those numbers get revised higher, $725 billion. I saw one estimate as high as $800 billion just this year. And so when Wall Street gets a glimpse of that ROI, those revenue increases, and I think really specifically, if you look under the hood, what Wall Street's seeing that it likes so much is margin expansion. We're seeing gross revenue margin expansion and even net operating margin expansion as well.
All right, and Mag 7 earnings aren't the only thing putting the focus on AI. What are you seeing when it comes to concentration in the space?
Yeah, so again, I think where the concentration, we think about the AI bottleneck itself. We want, and the market is seeing just how much of that money is getting stuck, right? In a sense, that $800 billion has to go somewhere. And so because there's so much demand there, you know, we saw Andy Jassy, we saw, you know, Micron cite that they could sell more compute if they had it. But when you're running up against that ceiling, of course, that's the demand pushing the prices higher.
And as we navigate market volatility from the ongoing conflict in the Middle East, what should investors be mindful of?
You know, when we talk about, you know, investors and consumers, it's almost like we have to make this distinction. Are we talking about the financial economy on Wall Street, or are we talking about the consumer on Main Street? And, you know, when we think about consumers, they have to be conscious of what's going to affect their pocketbooks. You know, at the end of the day, oil's been at $100 a barrel for, what is it now, 2 months that we've been going through this conflict. That affects consumers' pocketbooks. That bubble, if you will, of higher energy prices creates inflation, and that will have to work its way through the economy. Hopefully, we'll start to see the Strait fully open soon, but that's what investors have to be mindful of in the short term.
Why does oil have such an impact on the markets?
You know, because everything flows from the cost of energy. When we go to the grocery store, when we look at, you know, Target or Walmart, the products that we go and buy, the food that we buy, 40% of the cost of that comes down to transportation and energy. And so as that increases in price, that is effectively what creates that bubble that does sort of slowly move through the economy. We saw it in the PCE print last week, 3.5% increase year over year.
And I understand, speaking of the economy, that you believe the K-shaped economy discussion is back. Why is that?
You know, so much of the K-shaped economy discussion has been, I think, around income, you know, higher income earners versus lower income earners. But I think it's really important that we realize that that's also happening on the asset side. We kind of mentioned it before. There's almost like a different economy in the financial economy versus the real economy on Main Street. We saw, you know, consumer sentiment at its last print came in at 49. It's expected, I think this week we'll probably see it around 50 or so, maybe with a little bit of a bump up because the ceasefire talks weren't a part of the last print. When you look at the jobs market, you know, we're still looking at about 4.3% unemployment, and there's a lot that we can look at and dissect under the hood of that, but those are real pressures that consumers are feeling, and again, ultimately in their pocketbook.
All right, and the April jobs report is due Friday morning. What trends are you monitoring?
You know, when I am actually looking at when it comes to under the hood of the, you know, jobs data is something that stood out to me very much is since January of 2024, if you look at the, you know, different sectors of the economy, healthcare has added 1.7 million jobs. All other sectors combined have actually lost 56,000 jobs. And so when you have that kind of broad erosion in the job market, only really benefiting one sector like that, it speaks to me that there are some cracks in the job market, even if the unemployment rate, you know, of course, isn't like blowing through the roof yet.
All right, Ted Thatcher, founder and president of Bright Lake Wealth Management. Thank you for joining us at the New York Stock Exchange.
Ashley, it's great to be with you.